Hey traders, Raghee here, and in this free video for Simpler Futures, we're going to take a look at the S&P, the NASDAQ, and the current state of the trade war discussions and what it means to focus on buying from the bottom of the range. So the first thing that probably is going to be abundantly clear is that this market was very volatile this week, and one of the easiest things to do in a situation where it looks like the market might be breaking down, because gosh, everybody was talking about potentially a breakdown in this market. Remember that uptrends don't just automatically turn into downtrends. V-bottoms are actually quite rare in the market. Okay, so that is not what we're looking at. What we're looking at typically is the way in which a market can travel higher, transition into chop, and then we focus on the oversold buy levels to build a long position. So again, uptrends are sometimes broken, but then they turn into essentially what I would consider a choppy market, where we focus on the direction from which we came for more oversold, in this case oversold buys. Now, there's no way to account for volatility like this. I mean, we know we're going to have volatility. Obviously, the whole U.S.-China negotiations are a big part of this. And so we know that ultimately what we're going to deal with is volatility that maybe we can't quantify. And yet we know we still want to be buyers. So one of the easiest things to do is shift asset classes, which is what we do oftentimes in the futures. We go from futures to futures options. And that's the easiest way to, basically give ourselves a bit of a cushion while still quantifying our risk. Because the great thing about an options on a futures contract, or options in general, is whatever you've paid for the option, well, that's the upward of your risk. Again, if you're just going directionally buying calls, which is what we recommended all week long, really focusing on the weakness that we saw kick in around Wednesday, even Tuesday. Saw that weakness kick in. We started to wait for the market to sink into our zone and start to build a long position. So ultimately, we have an overall uptrend that breaks into transition. That transition becomes an opportunity to find oversold buys. Now, when you have that mindset and you've adjusted to looking at options, we can start to open up the NASDAQ and the S&P, not just to building a long position via futures options, but also to look at those relative performance leaders within both those broader averages. What are some relative performance leaders? One was Microsoft, another one was Visa. These were both alerts and trades that we took in the room this week, and actually we talked about some of them in yesterday's free video. In fact, if you watch that free video and then looked at this morning's action, that gave us really a third opportunity to build a long position in the names that I've been talking about, playing those oversold buys in. In this case, this was actually a trend following buy because we stayed green on the grab candles. There was no transition here, hence this was a relative performance leader. In fact, this looked better than the S&P, just like the Microsoft chart looked better than the NASDAQ. That's what I mean by relative performance leaders that are heavily weighted within the overall average. Now, there's a methodology that we use in order to capitalize on big one-day gains. We'll talk about that in the premium video, but really what I want to focus on here is a very important part of my trading, which is we do not buy higher highs. That is what we call the top of the range. Okay, we buy the bottom of the range. We buy corrections. You can call this a swing, a reversion, a retracement. You can call it a pullback. You can call it a correction, as we joke in the room and say, you can call this a bologna sandwich. But the bottom line is we want to think like big money flow. Let's talk about what that means for a moment. Take a look at this chart of the S&P now with basically what I call my submarket or submarket trend sonar. It's a volume weighted average price, gang, that we have anchored. So it's basically an A VWAP. And this is really the main way I think traders should use a volume weighted average price. I think a moving or rolling VWAP is fine, but once you realize the power in VWAP, you just kind of realize that anchoring the VWAP gives you a whole lot more accuracy. Look at the accuracy on the zone that this volume weighted average price defined. And I don't mean today. I mean going back to the most recent anchor we had was back in March. So take a look at the way in which the market responded to these volume weighted average price levels. And then I ask my traders, do you think you were on the opposite side of big money? No, I think in fact we were trading with big money by buying into these pullbacks defined by the volume weighted average price that is anchored. Okay, we don't buy up here, we buy the bottom of the range, and that's exactly what we did going into the week. So we're long into Monday, and check out the charts of Visa, Microsoft, Amazon, Apple, Google, and Facebook. If there was one stock that we anticipate is going to be a little bit of a laggard because it's usually hit a little bit harder by the trade narrative, it's Apple. Apple might give us an extra day or so to build that long position, but as the tide of the NASDAQ starts to move higher, X marks the spot, I think we're going to be seeing Apple join the party. I'll see you in the next update.